Dive into the world of stock market fundamental analysis and uncover the key insights for informed investment decisions. Absolutely. I'd be happy to explain fundamental analysis in the stock market in detail, including the key parameters you mentioned. Fundamental analysis involves evaluating a company's financial health and performance to make informed investment decisions. It focuses on understanding the underlying factors that can impact a company's future earnings and value. Here's a comprehensive guide to fundamental analysis, including the top 10 parameters and how to identify fundamentally strong companies. 1. Earnings per share, EPS. Earnings per share is the company's net income divided by its total outstanding shares. It reflects the profitability of the company on a per share basis. 2. Price to earnings ratio, P/E ratio. The P/E ratio is calculated by dividing the current stock price by the earnings per share. It helps you assess how much investors are willing to pay for each dollar of earnings. A lower P/E ratio might suggest undervaluation, but it's essential to compare it with industry peers. 3. Price to book ratio, P/B ratio. The P/B ratio compares a company's market price to its book value, total assets minus total liabilities. It indicates whether the stock is trading at a premium or a discount to its intrinsic value. 4. Dividend yield. Dividend yield is calculated by dividing the annual dividend per share by the current stock price. It helps investors understand the income generated from holding the stock. 5. Dividend payout ratio. This ratio measures the percentage of earnings paid out as dividends. A sustainable dividend payout ratio is important for long-term investors. 6. Debt to equity ratio. The debt to equity ratio shows the proportion of debt relative to shareholders' equity. A high ratio could indicate higher financial risk. 7. Return on equity, ROE. ROE measures how effectively a company uses shareholders' equity to generate profits. A higher ROE indicates efficient utilization of equity. 8. Operating cash flow. Operating cash flow represents the cash generated from the company's core operations. Positive and increasing cash flow is generally a positive sign. 9. Free cash flow. Free cash flow is the cash remaining after deducting capital expenditures from operating cash flow. It indicates how much cash the company has available for growth, acquisitions, dividends, etc. 10. Earnings growth rate. The earnings growth rate is the rate at which a company's earnings are expected to grow over a certain period. Consistent and sustainable growth is desirable. Reading cash flows. When analyzing cash flows, focus on the trend over time. Positive and increasing cash flows from operations suggest that the company's business operations are generating healthy cash. Compare operating and free cash flows to understand if the company has enough liquidity for expansion or dividend payments. Identifying fundamentally strong companies. To determine if a company is fundamentally strong, consider these steps. Financial ratios. Analyze the key ratios mentioned above and compare them to industry averages. Look for consistent and improving ratios over time. Consistent earnings. A strong company should have consistent and preferably growing earnings over the years. Stable dividends. If dividends are important to you, look for companies with a history of stable or growing dividend payouts. Low debt. Companies with a manageable debt load are generally more stable during economic downturns. Competitive advantage. Assess whether the company has a unique product, technology, or market position that gives it a competitive edge. Management quality. Research the management team's track record and their ability to steer the company in the right direction. Industry and market trends. Consider how the company is positioned in its industry and how it's adapting to changing market trends. Economic moat. Evaluate whether the company has barriers to entry for competitors, such as strong brand recognition, patents, or network effects. Research and analysis. Utilize financial statements, earnings reports, news, and industry research to gather a comprehensive view of the company's performance. Long-term outlook. A fundamentally strong company should have a clear vision for its future growth and a strategy to achieve it. Remember that fundamental analysis is just one part of investment decision making. It's essential to combine it with other forms of analysis, like technical analysis and macroeconomic trends, to make well-rounded investment choices. Additionally, market sentiment and unforeseen events can impact a company's stock price, so diversification and risk management are important aspects of any investment strategy. If you have enjoyed watching this video, then please do not forget to like and share. Your likes give me the motivation to make more such videos. Also, please subscribe our channel and press the bell icon, so that you get a notification of our video upload. Thank you. May God bless you with all His divine powers. Wish you bright years ahead.